Hey everybody, I'm Joshua Phillips with Churchill Mortgage. I'm sending this out to my clients. I'm also going to be passing this along to Amy and Jesse. They're on the Phillips team. As I always like to say, if you're working with the Phillips, you're in great hands. We're going to take great care of you. Well, let's get to it. It is Fed Day, December the 10th, and just a few moments ago, the Fed cut the Fed fund rate 25 basis points. This is the third Fed cut we've seen this year, and we also had a 1% cut last year. So on the whole, the Fed has cut the Fed fund rate 1.75%. Now, if you haven't heard about this or thought about this in a while, let's first talk about what is the Fed fund rate. The Fed fund rate is a rate that banks charge each other for overnight lending. So much different than the 30-year mortgage rate. As I've said numerous times, it is not the same thing as mortgage rates. I think that as a consumer, you hear Fed cut rates and you just instantly think mortgage rates are getting better. Now, they have gotten better over the last year. They've gotten better this year, but not necessarily because of the Fed cutting the Fed fund rate. So let's jump over. Well, a couple things we want to look at, and I'm just going to throw out several pieces of information. Often like to point to the 10-year Treasury yield as a good indicator. The 10-year Treasury yield, we want to see that go down. We want to see that in the threes because mortgage rates sit on top of that about 2%. So whatever that is, mortgage rates are going to sit about 2% higher than that. So we want to see that 10-year Treasury yield go down. And as I'm always telling customers, if you want to keep an eye on things yourself, look at the 10-year Treasury yield. Now, it's down 0.039, so that's good. I mean, that's a positive move. Now, the reality is we have not seen much downside move. We've had a couple of times when the rate got down to the 10-year Treasury yield got down to 4%, and then it bounced all the way up to 4.6, and now it's hit 4% again, 3.95, and they're about 4%. One of the things I'm going to talk about today is that mortgage rates just haven't changed a whole lot this year, certainly the last several months. Now, let's bounce over here and look at mortgage-backed securities. Now, mortgage-backed securities are where mortgage rates drive their value. Mortgages get bundled and sold as securities, and that really dictates more than anything what mortgage rates are doing. And what you want to see, green is good. You want to see green. You want to see that go up, and red is bad. And the higher the security price, the better mortgage rates are doing. And so this is a Japanese candlestick chart. Feel free to chat GPT it if you want to learn more about that. But this is a chart that a lot of analysts use to look at movements. Now, if we go back to the last Fed cut on October 29th, it was a red candle. It was a bad day. I think probably in the afternoon we got a reprice for the worst. Mortgage rates that day got a little bit worse. And you know what? After the last Fed cut just a few weeks ago, mortgage rates got a little bit worse for the next couple of weeks. And more often than not, that's what we see is actually mortgage rates getting a little bit worse, at least initially, after a Fed cut. Now, today, we're seeing the green candle. We're seeing a little bit better. So that's a good signal. So now 18 basis points, not a lot. It's not going to move the interest rates. And when you look at this as a 90-day chart, from my perspective, this is very flat. We have not seen rates move up very much. We have not seen rates move down very much. I would say up and down the last 3 months, rates have not moved more than 0.25%. And it's hard to see that it may not just stay this way for a while, that we may not see any big changes. I mean, if we go back to a year, okay, from where we were back in May, we've seen security prices really improve. Mortgage rates have improved, maybe 0.75% from that area or from the beginning of the year. But if you look at the last 90 days, flat, basically flat, rates not moving much at all. And I thought I'd pull this up as well. Freddie Mac, there's Fannie Mae and Freddie Mac. Those are your conventional lenders. Freddie Mac does a weekly survey. It's called the PMMS, Primary Mortgage Market Survey. They have been doing a survey. It's probably like 50 years they've been doing a survey. And this is, I would say, the gold standard of where mortgage rates are. And you'll see here with their most recent survey, They had the 30-year fix at 6.19, the 15-year at 5.44. By the way, that's great. That's a big improvement from where we were a couple years ago. But if you look here at the last year, now if we go back a full year from now, they had the 30-year sitting at what, 6.69. So we are 50 basis points better than we were a year ago. Now that's in light of the Fed cutting the Fed fund rate 1.75%. So again, no direct correlation with the Fed fund rate, although it's great to see mortgage rates get better. And we did see rates peak at 7% back, when was that? In January. And then, of course, they've come down since then. That's more like 70, 80 basis points. So it's been good movement. It's impossible to predict the future. Talking with a client yesterday about that, I have no idea where mortgage rates are going. It's the equivalent of saying, what is Apple stock going to be in the next 30 days? And it's like, I don't know. It depends on how many phones they sell, I guess. But it's really hard to predict. But hey, for now, it's great. It's good news. We are seeing mortgage rates come down to normal levels. And right now we are at, if you take the last 25, 30 years, these are normal interest rates where we are currently. And we may not get a ton more. We may see rates come down. They did say, Chairman Powell said that, what I read in the headlines, that maybe might see one more cut next year. Again, not that that correlates to interest rates, but may not see many more Fed cuts in the near term future. So anyway, well, hey, if you want to talk about interest rates for you specifically, or you want to talk about getting pre-approved, or maybe we talked months ago and you want to kind of update the conversation and see where things are, or maybe you're looking at refinancing and it is now the right time. Whatever that is, we're happy to have a conversation with you and see how we can help. All right, take care. Have a great day. And Merry Christmas, by the way. We're getting close to Christmas. Merry Christmas. Bye-bye.